Good morning, everybody. Welcome to the morning call. I'm Laz, filling in for Scott today. It is Friday. Thank goodness for that. What can we say that hasn't been said already this week? If you've been following the morning call or even some of the recaps throughout the course of this week, you know that the action has been, from a broader perspective, fairly muted. We are seeing steady increase in the market. The market is rising. Albeit slowly. It is a very, very slow-moving tape. You can see, if we look here at the weekly of the S&Ps, which I have up, you can see this is actually the spiders. You can see that this is a weekly chart. You can see that last week, which kicked the year off, we really didn't make any gains. We gapped up starting the new year. This week, we actually have some gains on the board in the SPYs and the S&Ps. That being said, it all has come on overnight trading. If we look at a daily chart here, you'll see that it's been very gap oriented. You can see the gap in price here to start the year and another gap here and pretty much sideways intraday for the most part. Very, very tight range intraday. So it's making, overall trading a little bit tougher. It really is much more geared right now for the active intraday trader. The money has been made on what I've been calling I'll wake the junk off the bottom trade, short squeezes, stocks that have pretty much been left for dead, that are starting to catch a bid, and when that happens, all the heavy short interest looks to cover, and it becomes a snowball effect where you get these meteoric, massive rises in price in a very short time. A lot of volatility, a lot of opportunity there for the intraday trader. Not so much an investor trade because, again, these are not healthy fundamental names, and they still have lots of work to do before they become, longer-term position-oriented type situations. And we'll take a look at some of those in a minute. Let's start with IBM here, and I talked about IBM yesterday, and it was in the Off the Charts newsletter. If you get Off the Charts, ominous-looking head and shoulders type situation developing here. IBM yesterday, while the market was rising, you can see. While the market is making gains, IBM is losing ground and becoming much more relatively weak. There's a clear divergence here between this bellwether big cap behemoth and the broader market. Should we get a close below this support, this is a be careful type of situation. We've seen these patterns in the past in the indexes and other stocks, and we know that they can be quite nasty if and when they follow through. So this is signaling much lower prices here in IBM, and something we need to keep on the radar because, IBM is, like I said, just a big cap bellwether tech stock. And let's move over to another big one, is Google. Google started the year nice and strong, ended the year, from that October gap in earnings, we saw pretty steady, increase in price, especially starting in December into early New Year, where we actually took out the 660 level. If we look at a weekly or a longer term, you can see that we took out these, prior highs up here before tailing down. So, the question is, will these prior highs now act as support, or is something changing here? And I think we'll know that in more time. Big volume sell-off a few days ago here in Google. Not much of a snapback so far, so don't see a lot of buyers, trying to step in here to pick this bottom. So we need to, keep this on the radar. Is this, a setup for another thrust higher, or is this going to bear flag and possibly break lower? So let's keep an eye on Google, as again, it has a lot of eyeballs, and there's a lot of people, trading this stock. Amazon. Another big cap tech name, underperforming. Remember, as the market's sitting at highs, this stock is sitting at, in the lower end of its range. Really no sustained buying here. The only buying you get is just, these snapback trades for a couple of days, and then the thrashing continues. Yesterday was a pretty scary sign for Amazon, in my opinion. This is the type of setup we like to see. It should hold in these averages. You see it wedged in between these two averages, the 8 and the 21 EMA. We like to see that spit out to the upside. This looks like it's getting spit out back to the downside. The trend continues. These railroad tracks continue lower. So be on the lookout for lower prices here in Amazon. And the one pillar of strength here in big cap tech is the beloved Apple. Into earnings next week. We could see another rise in price. Earlier in the week, we just barely took out prior 52-week highs. You can see just tailing through ever so slightly before then pulling back. This is a very controlled, methodical pullback, 3-day pullback into an average. Is this an opportunity for another buy setup? It looks to me like it is. I wouldn't necessarily go throw a ton of money here, but definitely going to watch this setup for another leap higher, as we could see, new 52-week highs into earnings. A lot of times the stock will run into earnings before the announcement, which, case in point here, the beginning of December, the stock was trading just about 370. Now it's trading, in the 420 area. So big rise in price here in a few weeks for the stock, and I suspect this trend might continue until this earnings announcement. So keep an eye on Apple if you're a short-term trader looking for a decent long setup. Some of the short squeeze symbols that we talked about, or that people have been making money in. Netflix, the big one, stock went from $65 to just about $100 a few days back. Big rise in price. Again, 3-day controlled pullback, tailing up yesterday. This looks to me like it could be a good buy setup for at least, at a very minimum, maybe a retest to this 100 level. We do have this gap. If you look to the left, there's an open gap that fills all the way up here. This was an earnings gap or some sort of news gap, I believe. So there's room for the stock to go higher. Like I said, at a very minimum, maybe retest this prior high at 100. So something for the longs to possibly sink their teeth into, buying a pullback here after a nice big volume rally. So let's watch Netflix in the days to come. RIM, another one. Yesterday, finally catching that bid in RIM, holding these averages, turning up, getting bought yesterday. I do think RIM can see into the 1750 area, which is this prior area of minor resistance, maybe even higher, back up into the $19 area. So let's keep RIM on the immediate radar here for some further gains. Watch this 8-period MA, as it seems to have supported the stock right now, and any pullback into that might be a buying opportunity. And I think for those of you looking for some stuff that maybe you haven't considered, RIM might be in your go-to list. Another short squeeze that we saw earlier is this Weight Watchers. Big thrust up. And again, take notice here of when, shorts start to cover, it can become a snowball effect, and you see these massive gains, percentage-wise in just, a few days. That is textbook short squeeze. Tailing down 2 days ago, a little bit of a topping tail. So it looks like the momentum here has died out. We could see a pullback into an average. But I would be very, very careful about being a buyer at this level. And I actually would probably look, for those of you that are more intraday or active, you might want to run, what Redler would call the cute short here against this tail, this high. Like I said, you might see a nice controlled, 2-day pullback here before any buyers step back in. So something on the short-term trader radar. Banks, Goldman, I think we're going to leg higher, possibly into the 105 area. I don't love the Goldman, I'll be honest. As the market sits at highs, the stock is really, even though it's making ground, you don't see that momentum. You don't see, that huge, big green bar showing you that there's a lot of enthusiasm here. Very, very controlled, slow grind higher. I'm not speculating as to, I think it's best at this point, you either, trade it to the long side for, some gains possibly to that 105 area, or maybe you step aside. Some of the other banks have actually performed better. Wells Fargo, you can see much better, much more enthusiasm in this trade, much bigger move percentage-wise. Bank of America even, much better trade than, let's say, the Goldman. So I think, if you're going to look at banks, you have to even be selective. You can't just put money into, any bank stock and hope for the best. You really have to pick and choose right now. What's trading the best? What has the best characteristics? Where money is flowing versus where money is not flowing. So I would be very careful about the Goldman trade, as other banks seem to be better performers. And I think JP Morgan had earnings this morning. So banks could have a little bit of activity. Let's take a look at JP Morgan. Into the 200 EMA here, you can see that black line, just a stone's throw above it. Like I said, prior resistance here at JP Morgan, JP has performed a lot better than Goldman. Into this area of resistance, we look to the left. just a stone's throw above here around 38, high 37s. This morning, let's take a look here, 24-hour. JP Morgan down around 35.5, so gapping down on earnings, so obviously the street not liking it. And this morning, the stock's going to open significantly lower down here in the the 35 area, so gapping down on earnings. And I suspect you're going to see that take its course on the rest of the bank stocks. Some other stocks that maybe are off the radar or not as mainstream, that don't get as much play, if you will. Some pharmaceutical names have seen huge moves, just massive, massive moves. Here's a symbol, Regeneron Pharmaceuticals, from the mid 50s up into, we touched $80 yesterday. Prior highs here, let's keep an eye out at this level. You can see this tail back here in September, tailing down again yesterday a little bit, probably ready to consolidate, if not pull back some. Usually after some sort of exaggerated move like this, you'll get some reversion to the mean trade where we pull back, and consolidate here and take some of these gains off the board. So some symbols that, I'm just going to throw up there that may not be on your radar. You might want to start watching. ALXN, another pharmaceutical name. I like the way this symbol acts right now. Very controlled pullback into a rising average. You can see how this 8 period is supporting the stock, tailing up yesterday. Something to consider on the long side here. If you can, break through this little flagging, area. I think this, we could tack on some more gains there. Jazz Pharmaceuticals, again, another huge type of move. Pulling back some. I don't think this one's ready yet. Still might see a little more downside. You want to see it maybe tail up at the averages or, build a nice high-level base here. But again, something for the radar, something to consider. And some other trade ideas that I'll throw out there just to, wrap it up is US Steel, another stock that's sort of been, hanging on the verge of a cliff. Really, really had a tough year in 2011. Lost a lot of ground from, the peak high here in February of 2011 at 65. Now we're, half of that, we're below 30. So U.S. Steel really been out of favor for a while. We could see, if it can clear this level, could see a trade back to this prior pivot high here at 32. So really just sort of a short-term trade here. If it can really push through 29, I like, U.S. Steel back to 32. So just a short-term trader's trade, something to consider. And something else we talked about is potash. For those watching ags, if potash can get through this 44 area with some conviction, I think you could see a trade higher. Little inverse head and shoulder here. Here's your left shoulder. Here's your head. Here's your right shoulder. So just a little bit of a bottoming reversal pattern developing here. Hasn't triggered yet, so don't jump the gun. But you could see a trade back to the $50 mark if we can get through that 44 with some conviction and a little bit of uptick in volume. I like potash there for a trade higher. So, to wrap it up, we have a couple different trade ideas. You have a market that is slowly grinding higher. You have big cap, heavyweight tech stocks. Some are performing, some aren't. You have a mixed bag. You have some stocks that were left for dead, Netflix, Bank of America, RIM, starting to show some life and some interest in becoming interesting trading scenarios once again, which is always good. And that's really what's going on right now. That's where money is being made. So take it for what it's worth. Part of being successful as a trader is having some patience and waiting for quality situations to develop, understanding where money flow is and where money flow isn't, and what side of the trade you want to be on and why. Be objective, be flexible, stay patient, and I'll talk to you on the virtual trading floor, and have a great weekend, everybody.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.